This video is for educational purposes only and is not financial advice. Always consult a professional before investing. Before we begin, it is crucial to state that this article is for informational purposes only. AI boom drives Nvidia plus 150%. Saradi. So, global AI spending is surging toward $200 billion. Now, with the disclaimer out of the way, let's turn to one of the most transformative trends of our time. The artificial intelligence sector is experiencing an unprecedented boom. Many investors are wondering if they have missed the boat. You have likely seen the meteoric rise of Nvidia Corp or NVDA. This rally is driven by massive spending on AI infrastructure across industries. So, what is all the excitement about? A major driver is a technology called generative AI. In simple terms, this is a type of artificial intelligence that can create new content. It is not just analyzing data, it is producing something original. This could be anything from writing an email, generating realistic images from a text description, composing music. You have likely interacted with it through chatbots, image creators. This ability to generate novel content is what makes it so powerful and versatile. Its potential is just beginning to be explored. The practical uses for generative AI are already making a significant impact. In the world of finance, algorithms can analyze market trends, generate investment strategies, detect fraudulent transactions with incredible speed and accuracy. In cybersecurity, AI systems can identify new types of threats, create defensive measures on the fly, protecting critical data from sophisticated attacks. These are not future possibilities, they are happening right now. Companies are using this technology to automate complex tasks, enhance creativity, make smarter, faster decisions, which boosts their bottom line and drives demand for the underlying technology. This is where Nvidia comes into the picture. The company became the undisputed leader because it was in the right place at the right time with the right product. Its powerful graphics processing units, or GPUs, were originally designed for gaming. Their architecture, however, proved perfect for the complex calculations AI models require. Nvidia recognized this early and invested heavily in building a full ecosystem of hardware-software, specifically for AI development. That strategic pivot gave them a massive head start, making their chips the gold standard. Data centers around the world, tech giant startups rushed to buy Nvidia's GPUs to power their AI ambitions. The more developers used Nvidia's platform, the more indispensable it became. While this was fantastic for Nvidia and shareholders, it underscores a key point for new investors. The ecosystem is bigger than one player. One of Nvidia's main competitors is Advanced Micro Devices, Inc., or AMD. For years, AMD has been a strong player in the central processing unit market, competing with Intel. Now, it is making a serious push into the AI chip space, with its own line of powerful GPUs designed for data centers. As the demand for AI chips continues to outstrip supply, many tech companies are looking for alternatives to Nvidia, and AMD is positioned as a primary beneficiary of this trend, offering a compelling choice for those building new AI systems. Another critical player is not a chip designer at all, but a manufacturer, Taiwan Semiconductor Manufacturing Co., or TSMC. This company is the world's largest contract chip manufacturer. And it is the foundry that actually produces the most advanced chips for companies like Nvidia, AMD, Apple. Simply put, without TSMC, the AI revolution would grind to a halt. As the demand for sophisticated AI chips grows, so does the demand for TSMC's cutting-edge manufacturing services. Moving from hardware to software, we find companies like Palantir Technologies Inc., or PLTR. Palantir specializes in big data analytics, and has developed a powerful AI platform called AIP. This platform helps large organizations, including government agencies and major corporations, make sense of vast amounts of complex data. Instead of just providing the computing power, Palantir provides the software tools to deploy AI for practical, real-world decision-making. As more businesses look to integrate AI into their core operations, demand for sophisticated software platforms like Palantir's is expected to grow significantly, offering a different angle on the AI investment theme. When considering these stocks, it is wise to think about diversification. Putting all your money into a single stock, no matter how promising, is risky. A simple strategy is to spread your investment across different parts of the AI ecosystem. chip designer like AMD, a manufacturer like TSMC, a software company like Palantir. This way, you are not overly reliant on the success of just one company. This approach allows you to participate in the broader growth of the AI sector while helping to mitigate some of the risks associated with individual company performance. While the opportunities in AI are, really exciting, it's essential to approach the market with a healthy dose of caution. The incredible hype surrounding AI has led to soaring stock valuations, and some analysts worry that we may be in, or maybe even approaching, an AI bubble. When a sector becomes this popular, there's a risk that stock prices become detached from their underlying financial performance. If the projected growth doesn't materialize as quickly as investors expect, we could see a significant market correction. It's important to remember that what goes up can, and often does, come down. Let's look at some simple data to put this all in perspective. From the start of 2023 to late 2024, an index of top AI companies might have shown a gain of over 150%, while the broader S&P 500 may have only returned around 25%. For instance, a stock like Nvidia saw its price multiply several times over. While these returns are phenomenal, they're also not sustainable in the long run. Such rapid appreciation increases the risk of a sharp pullback if there's any sign of slowing demand or increased competition. Another major risk is competition. AMD, investing billions to catch up, Google, Amazon, Microsoft. This increasing competition could eventually put pressure on Nvidia's profit margins. Furthermore, geopolitical risks, particularly those related to semiconductor supply chains and trade tensions, could disrupt the industry. A disruption in a key region like Taiwan, home to TSMC, could have a ripple effect across the entire global tech sector, impacting nearly every AI company. Therefore, investors need to balance optimism with realism. The AI revolution is real, but the path for AI stocks will likely be volatile. It's crucial to do your own research and understand the companies you're investing in beyond just the hype. Look at their revenue growth, profitability, and competitive position. Avoid chasing stocks simply because they're going up. A disciplined long-term approach is often more successful than trying to time a speculative bubble. Recognizing the risks is just as important as identifying the opportunities in this dynamic and rapidly evolving market. We have journeyed through the AI landscape, from the spending boom that ignited Nvidia's rally to the underlying technology of generative AI. We have also looked beyond the obvious leader to identify other key players like AMD, TSMC, Palantir, who are set to play crucial roles in this ongoing transformation. The AI ecosystem is a complex and interconnected web of hardware, software, manufacturing. Now, the question turns to you. Nvidia or the next big thing? Comment your AI bet and what's on your watch list. Subscribe for tech picks and future deep dives. Timestamps are in the description.